Welcome to another deep dive. Today, we're cutting through the noise in the rapidly evolving world of cryptocurrency.
Yeah, it's moving fast.
We've got a fresh stack of sources, from market reports to, well, some pretty groundbreaking regulatory announcements. Our mission is to really extract the important nuggets for you, help you understand the latest, development.
From market shifts to legislative changes.
Exactly. And what it all actually means for digital assets and the global economy.
It's definitely a dynamic period. We'll be trying to connect the dots here between, say, geopolitical shifts, some significant economic data,
Right.
and that intricate dance of regulation and innovation happening, well, all over the globe, really.
You've brought us some really insightful stuff.
Yeah, you too. We're ready to distill those critical insights for you.
Okay, so let's jump right in. Our sources are showing a definite surge, a pump in Bitcoin and global crypto prices as of today, July 3rd, 2025. What's driving this immediate market uplift? Any clear signals?
Well, a key insight from our sources really highlights the powerful role of anticipation. There's this strong expectation that tomorrow, July 4th, President Donald Trump will be signing a significant bill.
Okay.
And it's projected to have a notable positive impact on the U.S. economy. This anticipation-driven surge, it's a powerful signal. It shows the crypto market, especially Bitcoin, is increasingly responsive to traditional political certainty.
Interesting. So less about just pure tech innovation driving it right now.
Right. It suggests regulatory clarity, maybe more than raw innovation, is becoming a primary catalyst for, large-scale capital movement. And historically, a strong U.S. economy has often correlated positively with Bitcoin and other cryptos.
Makes sense.
So for you, it's probably worth keeping a close eye on Bitcoin's 24-hour trading volume. Maybe over the next 48 hours, there's even talk, a high possibility, of it hitting a new all-time high tomorrow.
Wow, okay. And it's not just economic anticipation, right? Our sources mentioned broader geopolitical stuff too. Talk of global peace even. President Trump tweeting about a potential ceasefire between Israel and Gaza.
Yeah, and this brings up a critical point about how that broad economic and political stability, or even just the hope for it, can influence market sentiment. Our sources also highlight some encouraging economic data. The Bureau of Labor Statistics noting a significant uptick, 140,000 new jobs added. That's a notable boost in the jobs market. First time in a while we've seen that kind of pump.
Right.
And it's compelling, to see how policies, even things like tariffs, which some alleged would increase inflation,
Yeah, I remember that debate.
are reported to have coincided with inflation actually decreasing consistently for the last 3 months. These are precisely the kinds of macro indicators that can directly impact crypto prices.
These macro tailwinds definitely seem reflected in the hard data then. Let's dig into those numbers. They really capture the surge, don't they? What are the most significant trends, or maybe anomalies you're seeing in market cap, trading volumes, specific assets?
Yeah, zooming out, the data paints a very clear picture. ETF inflows hit a staggering $452.8 million today. Just today.
450 million, wow.
Yeah. The global crypto market cap, it's at $3.44 trillion. That's up 4.22% in just 24 hours. Total volume at $118.79 billion, up 18.02%.
Okay.
Now, centralized exchange volume is lower, $13.65 billion. But DeFi, decentralized finance, accounts for roughly 9.36% of total volume. And the total value locked, the TVL in DeFi, is $115.8 billion. That's a key measure of active use, right?
Right, how much is actually in those protocols?
Exactly. We're seeing decentralized exchange dominance at 40.83%. Though it's important to remember many centralized exchanges actually use DEXs on their backend.
Okay. Good point.
But what's really compelling, I think, is the consistent TVL in real-world assets, RWA. It's holding steady, $12.81 billion for the last 2 months.
Holding steady despite everything else.
Irrespective of geopolitical chaos or crypto price swings.
Yeah.
And this consistency is, I think, a critical insight. It suggests tokenization is moving beyond just hype, proving its utility.
Exactly, like a stable bridge between traditional finance and blockchain. It suggests a future where even non-crypto folks will increasingly interact with blockchain, maybe indirectly through tokenized tangible assets. So given these impressive numbers, what's it mean for the big players? Bitcoin, Ethereum, where do they stand in this surge?
Well, Bitcoin's market cap is currently sitting at $2.16 trillion. Ethereum's has increased. It's up to $390 billion now.
Right.
Bitcoin's 24-hour trading volume, $56.27 billion. Ethereum's at $22.51 billion. Bitcoin dominance is up a bit, 62.80%. Ethereum's close to 9%. 8.9%.
Price-wise.
Bitcoin is up 2.57% in 24 hours, though it's actually slightly down over 7 days, about 2.93%. Ethereum has seen the biggest jump, up 5.72% in 24 hours.
Okay.
Ripple's XRP is also up about 2.99% in 24 hours.
Got it.
And naturally, as we always stress, this deep dive is, for informational purposes. Any investment decision should always be backed by your own thorough research.
Absolutely. Always do your own research.
Right.
Okay, now this next headline from our sources feels, well, particularly significant. Ripple, the software company, applying for a U.S. banking license.
Yeah, that's a big one.
On one hand, it feels like a huge step towards mainstream acceptance. But on the other, doesn't it raise questions about that whole decentralized ethos crypto was built on? They're basically admitting that maybe for stablecoins anyway, traditional banking rails are still kind of indispensable.
That's a really crucial point, and it definitely touches on a fascinating tension there. Our sources emphasize that this move, well, it makes a lot of sense for Ripple. Remember, they operate as a centralized entity.
Right. Use a distributed ledger, not quite blockchain in the same way.
Exactly. And they seem to be following in the footsteps of Circle, the issuer of USDC. They made a similar move.
Yeah.
There was some initial skepticism after a Wall Street Journal report, but Ripple CEO Brad Garlinghouse himself cleared it up pretty quickly on X.
Who confirmed it?
Yeah, confirmed the news. Said approval could set a new benchmark for trust in the stablecoin market. And crucially, approval would bring them under the direct oversight of the New York Department of Financial Services and, importantly, the Federal Reserve.
The Fed itself.
Yeah, much like Standard Custody Trust Company, who are also seeking a Federal Reserve master account. This whole trend, crypto entities pursuing traditional financial licenses, it's really defining this phase.
So, okay, if these stablecoin issuers are basically becoming banks, what's the practical difference for you, the average user? And does it fundamentally shift things for the truly decentralized alternatives?
Well, philosophically, yeah, many do see these entities as increasingly filling that traditional bank role. And while the regulation gives you that necessary layer of oversight, transparency, a government entity ensuring compliance.
Which is good for trust, presumably.
Right. It definitely fosters trust. But it also leads to questions about how well it aligns with the original DNA of open blockchain. Open source, publicly verifiable, censorship-resistant, neutral, borderless.
Yeah, the core principles.
Federally regulated stablecoins would inherently involve KYC, AML, CFT rules, know your customer, anti-money laundering, combating the financing of terrorism.
Standard banking stuff.
Exactly. And while those are vital for stopping illicit activities, they naturally bring in centralized control points.
Yeah.
They could potentially censor transactions or be restricted by borders, which, diverges from Bitcoin's founding ideas. However, specifically for a stablecoin, given its role, that federal regulation certainly builds confidence, which is why, personally, I'd probably trust a federally regulated Ripple-backed stablecoin.
Interesting perspective. Okay, so while Ripple makes its move, there's another regulatory drama playing out. Grayscale altcoin ETF. What's the latest with the SEC there? Didn't they approve it then? Pause it.
That's right. The U.S. SEC initially gave the green light to Grayscale's altcoin ETF. And it was ambitious, included Bitcoin, Ethereum, XRP, Solana, Cardano.
Quite a mix.
Yeah, but then almost immediately, they indefinitely paused that approval. Bloomberg analyst Eric Balchunas, he suggests this pause might mean the SEC is actually finalizing a broader framework for altcoin ETFs.
Ah, so maybe holding off until they have clearer general rules.
That's the thinking, yeah, waiting until guidelines are properly in place. But despite the delay, another Bloomberg analyst, James Seifert, seems pretty confident. He thinks these altcoin ETFs, including ones for Solana and XRP, will likely get approval by the end of 2025.
Okay, so delayed, not necessarily denied.
Seems that way. For anyone wanting to follow this closely, those two analysts, Balchunas and Seifert, they're definitely key sources to track for their insights.
Good tip. Okay, let's shift focus across the pond to Europe. Sources reveal quite a bit of movement in the stablecoin space there, too. Deutsche Bank and DWS launching a new Euro stablecoin, EUAU, partnering with Galaxy Digital. What makes this one stand out in what's becoming a crowded European market?
Well, what really seems to differentiate this one is their focus on institutional-grade proof of reserves. That's a big deal for bigger players. And their aim is to integrate directly with regulated institutions, fintechs, corporate treasuries.
So targeting the big money, the institutional side.
Precisely. And this move, crucially, has BaFin approval. That's the German regulator. It clearly positions Europe as a key battleground for stablecoins, especially, as you mentioned earlier, following the implementation of MiCA.
Right, the markets in crypto assets regulation.
Yeah, that's the landmark EU framework designed to bring legal certainty. And while compliant options like URC and others are gaining traction under MiCA, our sources also highlight the challenges faced by Tether, USDT. It's reportedly facing heavy delisting across Europe.
Why is that?
Due to non-compliance with these new MiCA regulations.
Ah. And speaking of Tether, our sources present, well, a pretty strong opinion on their audit reports. Some describe them as funny and ridiculous, noting their attestations, not full audits, done by an Italian firm.
Yeah, that's a recurring criticism.
It even raises the possibility, according to some sources, of Tether becoming a black swan event for the market.
And this really begs the question about transparency and, well, trust within the whole stablecoin ecosystem.
Yeah.
The concern is, look, if Tether were to face significant issues, it could have a massive negative impact on the entire crypto market, Bitcoin included.
Right, the contagion risk.
Exactly. It could potentially erode trust in blockchain technology itself. Which brings us back to that fundamental philosophical question, doesn't it? How do stablecoins, just by their nature and their regulatory needs, square with that original ethos of Bitcoin?
The open source, verifiable, censorship resistant.
Neutral, borderless. Yeah. Those foundational principles that stablecoins often have to kind of navigate around or compromise on to function in the regulated world.
So, okay, if these stablecoins don't always fully align with those core principles, why are they so incredibly popular? Why do they keep emerging with such force?
Because they offer solutions. Solutions to very real-world problems. For example, our sources highlighted this brilliant use case for Tether USDT in some South Asian countries.
Oh yeah, what's that?
Well, in areas with really high inflation, people are using USDT to convert their salaries almost immediately. And it effectively preserves, sometimes even increases their purchasing power over a year compared to just holding their native currencies.
Wow, so literally helping people survive economically.
Absolutely. It demonstrates that despite all the philosophical debates, these tools are providing tangible benefits. They're helping individuals, families preserve stability in really challenging inflationary environments. So, while personally I might trust a federally regulated stablecoin more, or maybe prefer Circle USDC over Tether USDT for its perceived transparency,
Right.
You can't deny the real utility that exists, even alongside the challenges to those core crypto principles. It's a complex picture.
Definitely complex. Okay, let's pivot now to another major narrative our sources say is picking up significant pace. Tokenization. Specifically, this fascinating development, JP Morgan and S&P Global collaborating to tokenize carbon credits.
Yeah, this is really interesting.
It sounds like a powerful step, bridging traditional finance with blockchain in a very practical way.
It really is. What's compelling here is seeing blockchain tech applied to traditional markets so concretely. JP Morgan's Kinesis project, working with S&P Global Commodity Insights, Eco-Registry, International Carbon Registry, they're actively advancing how blockchain can be used in carbon markets.
Carbon markets, right.
And this follows a lot of research looking at blockchain's potential to enhance trust, traceability, interoperability within these, frankly, crucial environmental markets.
So what are they testing specifically?
Well, initial testing is focused on managing the project and credit life cycles, the technical connectivity between different systems, data compatibility, basically trying to create a much more efficient and transparent system overall.
So, for you listening, and for the broader market, what are the core implications here? What does this tokenization effort really mean?
Well, implications are pretty significant, especially for scalability and confidence. Stakeholders involved are emphasizing that tokenization can really help scale the voluntary carbon market, the VCM.
That's where companies offset their emissions, right?
Exactly, where they buy and sell carbon credits. Tokenization could enable seamless settlement, making transactions faster and cheaper, and dramatically increase market confidence because everything's potentially more transparent on a blockchain.
Okay.
There's even talk of S&P Global possibly including Meta's registry in future tests.
Meta's registry.
Yeah.
Like Facebook's parent company.
Yeah, potentially expanding this carbon market infrastructure into financial markets on an even larger scale. It's just a really powerful signal of how tokenization is moving beyond just digital currencies. It's starting to genuinely transform other asset classes, making them more accessible, more transparent.
Fascinating stuff. Okay, now, let's take that deeper dive into Dubai and the Middle East. Our sources suggest it's rapidly becoming a major hub for digital asset innovation.
It certainly seems that way.
Two big pieces of news here. First, new landmark legislation from the Security and Commodity Authority. What's the significance of this new framework? Is it a game changer?
Well, putting it in the broader context, the UAE is making a really significant, very deliberate regulatory push. This new legislation, it's titled Regulating Token Securities and Tokenized Commodity Contracts. Pretty clear what it's about.
Yep, spells it out.
Its aim is to ensure transparency, protect investors, and, crucially, seamlessly integrate blockchain and digital assets right into the established financial system. It covers basically everything, from digital versions of traditional securities to contracts based on commodities.
Comprehensive.
Very. All entities involved, so issuers, platforms, service providers, custodians, they must be licensed by the SCA, the Security and Commodity Authority. And that licensing is based on strict criteria. Technical capability, capital adequacy, robust risk management.
So, setting a high bar.
Definitely. There are also requirements for clear disclosure documents, comprehensive AML-CFT measures, stringent cybersecurity standards, and importantly, the separation and safeguarding of investor funds. That's key.
Absolutely.
Investors also retain legal ownership of their digital assets, even if they're held by custodians. So yeah, it's a very comprehensive framework. It's designed to align with global standards, sending a really clear signal of the UAE's commitment to building a secure, regulated digital asset ecosystem.
Sounds thorough.
It is. For anyone looking to dive even deeper, our sources indicate the full 17-page document is out there publicly, but naturally, for any specific application, you'd want to consult a legal expert.
Of course. Okay, and the second big piece of news from Dubai, a strategic acquisition. Zodia Custody expanding aggressively in the UAE by buying Tungsten Custody. How does this move solidify Dubai's position? What does it tell us about institutional interest over there?
Well, what really stands out here is how this acquisition shores up Zodia's position. They want to be a global institutional-grade custody platform.
And Tungsten helps them do that in the UAE.
Exactly. Tungsten Custody is already a regulated digital asset custodian in the UAE. They're licensed under the Abu Dhabi Global Market, the ADGM, which is known globally for its rigorous regulatory standards.
Okay.
So this move is a major milestone for Zodia in their international expansion. And it clearly reflects that increasing institutional interest in robust, compliant digital asset infrastructure. They need places to safely store assets under clear rules.
Makes sense.
Zodia's goal is to build this compliant, secure, scalable global custody network. This deal brings them under the oversight of the Financial Services Regulatory Authority there. Dominic Longman, Zodia's global head of markets, actually praised the UAE's regulatory leadership and the collaborative market environment.
So a vote of confidence in the UAE's approach.
Absolutely. This partnership signals a strong convergence between global fintech, like Zodia, and the UAE regulations. It really supports the UAE's ambition to become a global leader in digital assets.
Wow. We've certainly covered a lot of ground today, from those macro forces driving crypto prices.
Yeah, the anticipation, the economic
But that intricate dance of regulation and innovation happening all across the globe. We've seen how stablecoins are, both challenging the system and serving real needs within it.
That tension is fascinating.
And how tokenization is expanding its reach.
Yeah.
Way beyond just currency, into things like carbon credits.
It really does highlight how interconnected all these developments are becoming. What really stands out to me, I think, is the accelerating pace of institutional engagement.
Yeah, that seems key.
And the push for regulatory clarity that enables it, particularly in regions like the UAE, as we just discussed, this drive for regulated, compliant infrastructure. It feels like it's going to be a defining characteristic of the digital asset space moving forward. It signals a maturing market, doesn't it?
It really does. So wrapping this up, what does all of this mean for you listening? Maybe consider this. In a world where digital assets are becoming more and more integrated into mainstream finance, how might that philosophical tension, the one between decentralization, crypto's original DNA, and the need for centralized regulation, how might that ultimately shape the future of value itself?
That's the big question.
Is a fully open, permissionless system truly achievable on a global scale? Or is some kind of regulated middle ground the perhaps inevitable path to mass adoption and trust?
A lot to think about there.
Definitely something to ponder until our next deep dive.